composure! You've come too far! There's too much to lose! You gotta keep your composure!
All right, it's Brian here from your Everyday Pro Investor team. Unfortunately, Evan and I weren't able to get together this weekend and record, so we're each making separate videos. Just got the kid to bed, just got some dinner coming on the table here, and doing a little bit of prep work for the week. So I'm going to keep it short and sweet, but what am I looking for next week? What do I think about last week? Now, I haven't got a lot to do this weekend, unfortunately. A lot going on, wasn't able to do the research, but last week, right, we had oil go negative. How does that happen? It was the May contract, not that big a deal. The real price is probably close reflected to the June contract, but how does that happen? WTI actually settled in real barrels. Here's the thing. You had people that are basically financial traders. They were the ones that were holding these contracts that all of a sudden oil came due. Its contract's about to expire. They were actually going to have to take on, I believe it's 1,000 barrels for the WTI. So what happens? They were literally paying people to take it off their hands. Now, normally, it wouldn't be the end of the world if you had to take on some barrels, but there is no demand in the world right now. Those barrels, there's almost nowhere to store them. We're actually going to be out of storage probably mid-May at the pace we're going right now. So bringing on oil, collecting 1,000 barrels based on a contract, pretty big deal. Oil went negative, WTI, like I said. It was, I believe, got $37 negative, so somebody's willing to pay $37 a barrel for you to take it off their hands. If oil wasn't actually, let's say it was actually worth more than that at the time, a lot of people would have stepped in and said, yeah, absolutely, pay me $37 a barrel to take it. Ironically, nobody was really stepping in to say that. Now, it made all the headlines and everything, but there was only, I believe it was less than 1,000 contracts traded in negative territory. Most big real oil players had already previously settled all their contracts the week prior. Now, the USO, which is an ETF that tracks oil, was probably one of the biggest problems in this. This ETF only has front month contracts, and it holds them basically until expiration, as I understand it. So basically, the ETF, the ETF got caught with its pants down because of this current situation we're in. We got a black swan event, and it was set up poorly. Please don't invest in this product. You maybe could day trade it. If you're a retail investor, stay away from USO. Stay away. You're not a futures trader. Don't try to be an expert on it. Stay away from oil. Energy names, even in the equity space, I would stay away from those, but that's your prerogative. So oil went negative. On Friday, we found out that rig count was at its lowest level in the U.S. since July 2016. Like I said, there is no demand. We're all sitting at home. We're all quarantined. Globally, I mean, China is they're back to work, but people still aren't really going out on the weekends. It's mainly just the weekdays going to work. Market was finally down for the week, but it was down like 1%. Not that big a deal. Still looking for a bigger pullback. Could we get it this week? What do we got coming up this week? We've got, I believe, the 5 biggest companies in the S&P 500 reporting this week. It would be Amazon, Facebook, Google, Apple and Microsoft, sorry. Those, I believe, are all reporting this week. I think you could get some disappointments out of Apple, Google, and Facebook. Google and Facebook because of the advertisement decline. Apple because I don't think people are buying their hardware like they normally would. Maybe they're stepping into the services while they're in quarantine. Could be wrong. I do think Microsoft and Amazon, we both know these are performing well. I think they can beat expectations. Those 5 companies now are actually larger than the bottom 350 companies in the S&P 500. I don't think that's ever happened. I believe these top 5 companies are the largest percentage they've ever been. It's a little bit scary. So these 5 names could cause the market to roll over, or even 3 or 4 of them if they disappoint. I think we could get a pullback this week. I know I keep saying that. We're due. You can see it. The market's tentative. Now, if all of these names crush it, we're going up. We're breaking through the 290. 2,900 level on the S&P 500, 290 on the SPY. I think that there's real potential there, but I'm still in the bear camp. I think we can pull back to 2,550 on the S&P and look to put money to work. Now, some individual names. Talked about Shopify. I thought it was overvalued right now. I still think it's overvalued. Did get some new information though. I've talked to a lot of small businesses. Obviously they released a report. They have crazy sales going on right now, so they absolutely could beat expectations when they report here in next week or the week after. So I could be wrong on that name. It probably deserves to be running up right now. It sounds like they're going to be a winner because of this quarantine thing. I hear small companies actually saying, I don't even need retail space. I'm going straight to e-commerce, and I'm going with Shopify. So that's a big deal. Wingstop. I got an email from somebody that said, hey, you keep saying Wingstop's overvalued. Jim Cramer just told me it's not and that you're a bozo. That's fine that Jim Cramer thinks that. I still think it's overvalued. I actually like Wingstop, but it's overvalued. I'm looking for a pullback. This name is about to report in 2 weeks, I believe. They might beat earnings. I don't know. I could be wrong. I think they're a long-term winner in this space. I think it's a long-term great name. I just feel like they're overvalued. If you want to be in this name, you can afford to buy 100 shares. I think the best way to do it is you just go buy 100 shares. You buy the put that expires in May, so you'll capture the earnings. And that way, if it does go down, you have somebody to buy your shares from you right at where you bought them. So you buy that put that's right at the money. And then maybe you sell an upside call against it if you want to bring in some premium. I'd say that's risky if you really like the name long term. But I think if you buy into the name now, you have to have protection because this thing could go $15, $20 lower on a bad earnings report. Long term, great name, absolutely be in it. I'm looking for a pullback to get into this name. I think that kind of wraps it up for the week. I know that that's not much, short video. Hopefully Evan's got more in his, haven't seen it yet, but I don't have a whole lot, haven't had a great opportunity to do a lot of work. Did add JP Morgan last week, did a buy right on it, bought in at around $89, sold the 95 call against it, I believe, expiring this week. I think that is a great name to own long term, owning it somewhere in the 80s. And if I can keep selling calls against it and bringing in premium, that even advances the yield, which is already at like 3.5%, 4%. Great name, one of the best run banks. I like it. Let's have a good week. And I'm going to go eat some dinner now. I hope everybody's having an all right time being quarantined. We're seeing this economy get back to work. And I'll see y'all later.